I'd like to welcome Matthew Dibb from Singapore. He runs Astronaut Capital. And actually, Adam Luboff had introduced us to Matt, and he suggested that we bring him in as a guest speaker. So we're actually excited to have Matt. So Matt, I'll let you take over. Just let us know who you are, what brought you to blockchain, what you're doing now, and we're excited to see your PowerPoint presentation. So feel free to lead the way.
Great, cool. Thanks for having me. First and foremost, it's as we know, it's a amazing and really exciting market that we're all in. I myself have been in it for now what feels like forever. 1 year in this world feels like 20 in others, or real life. And I can certainly say that over the last year and a half or so, we've experienced a lot of the ups and downs and volatility, and certainly being able to look at a lot of the opportunities that are in the market as well. So what I wanted to do basically over the next sort of 30 minutes, I've put together a little quick presentation that I like to do things visually. So to sort of make my point and show you sort of how we got to where we did today, it has been quite a bit of a journey. And so I'm hoping to show you some of that and the rationale behind what we did to become an asset manager, because it's not what we actually started out as. So what I might do is we'll go through that, and if you've got questions along the way, feel free to shout out, and I'm more than happy to answer them. But this is some of the content that I want to go over. The first being about me and the journey into crypto, how we actually got into crypto, and everybody's got their own story. And then from becoming a research house and really pivoting into what we are now today, which is a asset management firm for ICOs specifically. And then our experience in holding a token sale, which was really interesting and something that I'm not sure if I would do again. It was a great experience, but probably one of the most stressful ones. So I'll tell you a little bit about that. And then some of the observations and trends of the initial coin offering ecosystem, if you like. It's changing rapidly. Every few weeks is something different. We're seeing it move at a rapid pace, and I'm wanting to highlight some of what we are seeing there and how it may affect any of you on sort of your path forward. And then market evolution, how we've seen it all change and what we expect. And lastly would be what we look for in ICOs and some of the opportunity that we see going forward, in particular our predictions, where we think that the growth segment in the markets is going to be. And then more Q&A if you've got any questions as well. So let's kick it off. First and foremost, this is me. About me, I've been working in finance pretty much since I left school. I'm 30 years old now. And my dad put me straight into an investment bank when I was basically 17. You can see me on the right there. That's pre-crypto, when I had a lot of hair and no wrinkles or anything like that. You can see me now, obviously, on the video. Things change. I was the youngest equities trader in Australia and licensed stockbrokers. So I've always been in the investment banking game, institutional. And, I traded everything from futures to derivatives, commodities, bonds, you name it. I've been in that market, and all from Australia as well. And from there, I did quite a few different things in sort of the financial services industry. But what I moved into was something that I suppose I'll call it the gateway that bridged me into cryptocurrencies, and that's small cap analysis. So I started a firm quite some time ago that was specifically for small cap research. Now, you probably know them as pink sheets in the US. You think of Jordan Belfort, Wolf of Wall Street, penny stocks, if you like. That was sort of my forte, is research into companies that were going to IPO that was sub 15, sub $10 million, and ripping open apart a prospectus that really had nothing in it. You can see where I'm going with this, right? looking at numbers that probably didn't exist and multiples that nobody could really prove, and doing analysis and all of that. And this business still runs today, still very successful. We distribute all of our research through the likes of E-Trade and Bloomberg, et cetera, et cetera. And it probably, it really was, as I said before, the gateway as to what led us to where we are today. And I'll show you that in a minute. You'll be able to see it side by side. But firstly, I get asked this a lot, how did you get into crypto? And it's always a really interesting one. I love hearing people's stories, and, a lot of the miners, were in the early days. Mine's a little bit different. For me, it was when I was back on the futures desk, which was in Australia. So we were trading from 11 p.m. through till 6 a.m. in the morning. That's the night desk. Nobody wants the night desk in Australia. And we're trading on the CME and the NIBOT. And you always had a trading buddy that you had to sit with on the night desk. And he said to me, listen, you've seen that movie Limitless, right? I said, yeah. He said, that thing, that brain pill that he takes, it's real. You can actually buy that on the internet. I said, no way, you can't. He said, yeah, it's real. So I said, okay, well, let's have a look at what this brain pill is. And when we went onto the website, it said you need to buy it in Bitcoin. I'm thinking, what the hell is this Bitcoin thing? We ended up buying between us 24 Bitcoins and spent about $100 at that time in Bitcoin on this brain pill that we used once and never used again. My point being is that this transaction that we did, which happened instantly, why they were accepting Bitcoin, I had absolutely no idea. But this transaction happened instantly, and 1 week later, we received something in the mail, and we thought, "Wow, this is different. How does this work?" And so, I sort of charted where it was along the whole timeline of Bitcoin as to where we bought between us, and it was only a few. We can see back in 2011, it was trading at 2012, $13, and then $145 in 2014 as well, 2013, 2014. And throughout that period, being a trader, I really was unsure as to what this thing was. All we knew is that it was really volatile, which is generally good for traders, but it wasn't even on our radar. And not until almost 3 years later did we actually realize what we still had in our wallet. It was a really nice surprise to know that we had 15 Bitcoin still in a wallet years and years later. But that wasn't really what got me and my partners into what we do today. And what that was basically this moment, this light bulb moment for me. After being in trading and proprietary trading for some time, I then went into venture capital. And a really interesting thing happened to me. In 2016, I was running the venture capital arm for a company in Dubai called Incipient Capital. And basically we'd get pitched, numerous times per day. There was this one quite interesting tech company in 2016 that pitched me. And we thought that it may have had some legs, but maybe not. We couldn't really understand it. We said no, and they did the rounds for about 3 to 4 months or so. And then in late 2016, I think it was, they raised $22 million via this thing called an ICO. And that for us was mind-blowing. We're thinking, what is this whole ICO thing, and how is it? Is this crowdfunding? How is it that they raised $22 million in a week from people that they've never met? And an average purchase value of, I think, was $1,000. So that's a lot of investors. And all of a sudden we're thinking, wow, this is really, really odd. Is it a new method of funding? So we had these assumptions. Is this a new method of funding? If it is, it's really not going to be long until the whole market is doing exactly the same. But those things are great. If people are putting up $22 million for a company that we knocked back, then is it a good investment or a bad investment? And who's actually deciding? So we were in this moral dilemma thinking, wow, money can be raised that easily, but we knock them back. But all these other people, thousands upon thousands of people, bought into it. So what we ended up doing was executing. This was in late 2016. We first started with institutional clients and then took it retail. We started a company called Piccolo Research. And what that was, and you can see the similarities on the right-hand side in the research, was effectively taking what we already knew, which was small cap pre-revenue research, and applying it to initial coin offerings. Okay, so we'll do things like the analysis of management, the technical analysis, we'll look at the SWOT analysis, the deal structure, pretty much everything. And we said, okay, we're going to do 1 or 2 of these a week. And we did for a couple of weeks. We did a launch on Product Hunt, got 15,000 subscribers like instantly. And we said, wow, this thing must have some legs. But we were independent, and independent meant no fees, no remuneration, pretty much nothing. It's bootstrapping an idea and hopefully figuring out how you're going to make money later. But in creating this research company, we were one of the first. Not everybody loved us. Being independent also means that you're putting out research on companies that is not so great. And that's where the threats come, and the phone calls and the lawyers and this and that. And so we were in this ecosystem, this new market that was very, very odd to us, because there's no regulatory environment around it, particularly at this time, beginning of 2017, and having a lot of angry people, a lot of very happy people as well. And so it was all very new. But the problem for us was, we're going to run out of money. How are we actually going to monetize what we're doing? Because, you know, it's not really a business if you're not planning to make any money off it in any way. So we had 2 options, which was either charge companies for a report, which is what a number of other companies do. And you know, we've always felt that the moment you do that, you're not really independent, because somebody's paying you for a report and they expect it to be positive. So it sort of defeats the whole purpose of it. Yet there are many companies out there that do it. Second was to charge a subscription fee, and you've got different companies that are doing that, like Weiss Ratings and Hacked, etc. So what we decided to do in pure bootstrapping fashion was effectively send out a survey to understand. You know, we have over 20,000 people on our mailing list at this time, and open rates were unbelievable, like 90%. Everybody was looking at it. But out of all those people, and there's about 10,000 people that responded to this survey, right? There was almost 60% that were reading it, but didn't actually know how to buy into cryptocurrency or ICOs. Now, there was 35% that sort of knew, but they also said that they were too scared. And then there was the remainder as well, which was over, you know, another 37% of that whole sample as well, also said that even if they did get in, they wouldn't know how to manage it, manage their position, manage their risk, et cetera, et cetera. So we looked at those 2 options again and said, this doesn't seem right. None of those really make any sense. What do people actually really need? They need simple, concise, and verified information. They need entry, management, risk minimization, transparency. They need to know that what they're looking at and what they're reading, what they like, that they're comfortable with it. And it has to be low touch, because no business really ever works unless it is low touch. They don't want to be spending a lot of time on it. They can't afford to be. So we went for something a bit different, and we started an ICO for ICOs, which in hindsight seems like it was crazy when we told people about it. They said, an ICO for ICOs, you must be kidding. This market is going to blow up, isn't it? And really, the more we spoke about it with everybody, the more they got it. So what we did is we took over the research firm with an asset management firm called Astronaut Capital, and we launched that. And that's a research integrated asset manager, probably one of the only. And as we said, we're focused on transparency. It was a managed service that we launched, and a security token. So effectively, you buy a token in Astronaut Capital. We call them Astros. And that Astro entitles you to a share of the profits in which we're investing in ICOs. So this was, at the time, for us, we felt it was very innovative. We had an amazing reception to it. And a lot of people always ask us, why an ICO? And to be fair, it's a very good question, because we were offered a lot of money institutionally to do a traditional fund, more than what we ended up raising in an ICO. But we did it because we're research analysts, and it was the experience that we wanted to feel. We wanted to understand as an analyst. Well, we're looking at ICOs all day. We're looking at 5 each per day, but we actually want to know what it is like to do one. And so we did, and we experienced everything from the market ups and downs and FUD, as they call it, to the shillers and the reverse shillers, the scams that pop up while you're doing an ICO, phishing and impersonating. I had people that started creating profiles of myself and trying to scam the other token holders or prospective token holders, trolls. There was everything, and it was an experience, as I said to you before, that I would never forget. And I've done now 3 IPOs in my time, and I can tell you that those are most likely easier in hindsight than doing this. This is 24/7 global, but it was an absolutely amazing experience, and we came out so much better for doing it, particularly as a research firm. What we achieved was a really strong and engaged community. That has to be one of the best things about, doing an ICO, being a token, is that people do support you, particularly if they believe in what you're doing. We didn't have to do any marketing. We already had a lot of really heavy supporters. And it validated, I should say, what our business idea was, which was that people wanted a low-touch service to be able to participate comfortably in the market, and that's what we gave them. So where are we today? Just a quick highlight of Astronaut Capital. We had our first quarter. It was a short quarter, 55 days out of what should have been 90. We grew funds under management significantly, up over $2 million. We ended up paying out basically a 70% dividend in our first quarter based on the ICO price. So we've had an extremely good run so far. And this quarter is looking even better for us. So what I'm also wanting to talk about is sort of some of the trends, because since doing our ICO, and a lot of you I'm sure are looking at different market opportunities every week, things that are popping up, it's interesting to sort of look back at what the market was and what it is now. And I think it's a great thing to do, because then you can make an assumption as to what is more likely to happen over the next 6 to 12 months as well, because this market moves extremely fast. So if you look at, for example, in early 2017, if any of you were active in the market at that time, you were looking at white papers that resembled, the original Bitcoin white paper, Times New Roman, centered, justified, 15 pages, that was it. There was nothing else. There was no KYC when you were applying. There was no tokenomics. They didn't say how they were going to spend any money. They didn't even say sometimes how much money they were going to raise, or Ethereum or Bitcoin. And it was really for contribution purposes. It was everybody who had previously made money off Bitcoin and Ethereum that were the only ones participating in the very early stages. Now, in that time, if you're familiar with the concepts of private sale, pre-sale, and public sale, which are the big 3, public sale was basically 100% there. There was no such thing as a private sale or a pre-sale. It was just, here is my idea in my white paper. You can send Ethereum to this address that we put on the website. And this is when times were extremely simple, as you know. Things then changed around mid-2017. You then started getting these enhanced white papers, you call it, and light papers, the introduction of KYC globally, introduction of white lists where people would have to pre-register, Facebook and Twitter advertising. You had Money Mayweather with, loads of cash in his private jet supporting ICOs, YouTube influencers, and then a concept called bounties even came out, which was, basically giving free tokens to people to help market exactly what they were doing, their ICO. And we also found that there was a shift in sales. all of a sudden you had this thing called private sale pop up, or pre-sale, where effectively there would be money raised before the sale. In IPO terms, you'd call that a pre-raising or a convertible note or something like that, where you're getting a discount. But in the ICO world, it was called a private sale. And all of a sudden, we saw about 25 to 30% of money being raised in this thing called a private sale. We then look at now, and you can see on the right-hand side what a white paper looks like now on many of them. They resemble a prospectus. We're seeing a lot more time spent on things like marketing and graphics, etc. And they look like, and they have the disclaimers to the same level, etc., as a prospectus as well. Now we're seeing over demand of whitelists. Whitelists, when people are signing up for them, are sometimes closed within minutes, where they'll register 20 to 30,000 people instantly. SAFT, which is a simple agreement for future tokens, if you've heard of that, which was based off the Y Combinator document, I believe. That is really almost the only method right now of how people are gaining subscriptions for money or Ethereum or US dollars, anything. I think the most interesting thing right now about the market and how this has all evolved is that you've actually got some companies that are knocking back funding, which is a really, really interesting thing. Instead, money is not money anymore. What companies are looking for, which is smart to some extent, is strategic partners. And they're looking for people that can help further their product, people that can bring in smart money. And we're also seeing a majority of funding being done via private sale. So it's not uncommon right now. Current, for example, which is on the right-hand side, they only did a private sale, $35 million in about a month, and decided to cancel their public sale. So all of a sudden, we've seen this big shift from what was a community public raising type process for ICOs, and now it's completely flipped, inverse. And this has all happened in less than 12 months. So how has it actually all occurred? Really, it's institutions that are coming in. It's institutions that are looking to finally make their mark within the industry. We can see Telegram, for example, has raised over $850 million now. And I get called every day from a different broker or licensed dealer, etc., wanting to flip their Telegram tokens. They were originally bought, I think, at 30 cents, and I've got people offering them to me anywhere between 50 cents and $1. So we're finding that this is almost becoming like for example, the same thing with Uber has happened previously, or any of these private companies that look like they might go public. We're seeing the exact same thing happen from an institutional side. Most of these ICOs are looking for funds to back them instead of just regular everyday investors. So people like Pantera, Block Tower Capital, Blockchain Capital, Brock Pierce, as somebody who was mentioning before, ourselves, those are the types of investors that are looking for, because they're much more strategic. So why is the market changing, though? I think this is one of the most interesting things. We believe that the market is actually maturing, and this is actually a really good thing. What I find really interesting about this whole ecosystem is that it is self-regulating, which I don't think any other market has really done this. Everybody who is passionate about it wants to kick out anybody who is doing wrong, the scammers, the people that are trying to use it to their own advantage. And because of that, the governments in many areas are stepping in and saying, this is what we should be doing, and this is what we need to implement at some point in time. But it's actually the community that is self-regulating the whole market. What we're also seeing is a lot of institutional interest, which is rising, as well as strategic selection of investors, which is smart money, as I said before. People are, for one of the first times, actually questioning whether some of these token sales actually need a token, which is refreshing, because a lot of the time there was last year a lot of ICOs that were raising for pretty much no reason. A token was never really going to fit their business model, so why bother actually doing it? It was really just a means of raising finance. And then established companies are also seeing the potential. I think that's one of the most interesting things, is that you've got really big companies now that are already making a lot of money that can actually see the potential in tokenizing. And I think that is Telegram being one example, but we're seeing many more. So we find that those are really the heavy hitting points that are really changing the market. Are there any questions for the time being?
Just raise a hand if you have any questions.
Nothing yet? Okay.
All right, keep on going.
So why do we invest in ICOs? Because we get asked this a lot, and there's a lot of media around ICOs, the good and the bad. But when it comes down to it, it is investment analysis and it is math. And there's a way to outperform the market, and we do it via initial coin offerings. If you can see this whole chart there, hopefully, yep. You can see this is our return from Piccolo Research, our research company. If you had taken every recommendation that we've done in the last year, you would see that this is effectively the returns that you'd be getting for each single one. There's only about 3 or 4 there that have been negative, and only up to a few %. But when you weigh up the positive return on investment, things like ICX, which is Icon, up almost 3,000%. This is where fund managers, investors are really able to outperform a market to degrees that they wouldn't think are possible. And this has been a consistent thing with ICOs and cryptocurrency for as long as it has been around. Now, I'm not saying that that's going to continue to happen, but there's no doubt that with good analysis also comes good returns, even when you compare to major indices. So a lot of people will generally say, well, that's all well and good, but what if you just held Bitcoin, or what if you just held Ethereum? How would you go? Because that's really the benchmark, isn't it? And I mean, even in this here, we've been able to compare it against the price action starting off with $1 million. What would you have since last year, May last year, since our release of recommendations? And with those, you can see that there's a substantial difference in terms of the end result and return on investment. So how do we pick them? And you might find this interesting, because if any of you are looking at different ICOs, and we've actually written a number of ebooks and books on this, how do we pick a good ICO? The first thing we actually look for, believe it or not, because there's so many ICOs and we get approached probably by about 10 new ones a day now, would be red flags. It's the easiest thing to look at to knock them out and start filtering. And that could be anything between the way that it's structured, or when it was incorporated, if it's not incorporated, when they registered the website, the team, it's really anything. And we've got a whole list of things there, but looking for something that may be wrong about a particular ICO or token or sale is the first thing to do, because it's generally the easiest. We then look at commercial viability. We ask ourselves, is this actually a relevant use case? Does this actually need a token? That's a really good question, because a lot of the time when you think about it, it probably doesn't. And so for that reason, it will get negative points. We then look at terms and structure. If, for example, the team is taking 30 or 40% of tokens to themselves and keeping those with a vesting period of 3 months, then that's an issue. And so we look at how much some of these ICOs are raising, whether they need to be raising that much. You can't tell me that Telegram are going to be spending $850 million on development, right? Nor would they be on marketing. And so many of these ICOs are the same. You've heard of the terms soft cap and hard cap or max cap. How is somebody soft cap $2 million, which means that they can do the project sufficiently at $2 million, but their hard cap is $35 million? What is that between 2 and 35? Why can they do it at 2, but they need 35, or they want 35? So these are the sorts of questions that we like to ask. And most of the time, the teams don't really have an answer. And again, that's a red flag. We look at experience of the teams, whether they are just opportunistic entrepreneurs that have an existing business maybe and want to catch on to a trend and incorporate blockchain into something that probably doesn't need blockchain. And then we look at technical due diligence, looking through GitHub repositories, etc. Probably less important is social due diligence and community support, mainly because that can be manipulated very easily. And so that's something that we look at probably less and less. And then we look at the overall SWOT analysis on it as well. So now that you have sort of a brief overview as to how we look at things, I'm going to show you the 6 big tips for us in terms of monetization within the whole blockchain ecosystem, where we think the money is going to be flowing and where we believe there's going to be significant token appreciation or even from services appreciation outside of the whole ICO space as well. So I will start with number 1, which would be decentralized exchanges. Now, Coinbase, as you know, I believe it made almost $1 billion of transactions or revenue last year, and I've heard quotes of $600 million in profit, which is enormous. Coinbase is effectively a centralized exchange, as is Poloniex, as is Binance. And the thing is about centralized exchanges is that they actually go against everything that blockchain stands for. They are on servers. They are vulnerable to hacks. They also carry significant legal liability for the owners as well. We've seen Mt. Gox go down, etc. So at the moment, these exchanges, these centralized exchanges, are doing extremely well. They're making a lot of money, and they'll probably continue to for some time. But what we're really interested in and where we're putting a lot of our money right now is decentralized exchanges. So we're looking at things like AirSwap, Bancor, Kyber Network. These are purely peer-to-peer. There is nobody really controlling them other than setting up the infrastructure. And outside of that, they are aligned with the whole methodology of what blockchain is. They're great to use. Most of these decentralized exchanges are actually only launching now at the beginning of this year. So this, for us, is a really, really hot sort of corner of the investment sphere that we're looking at, and we believe is going to most likely do really, really well over the next, well, I'll say a couple of months short term, but even a few years as well. So this is going to be sort of the avenue for growth, particularly as market liquidity picks up. The second thing that we look at is securities tokenization, which we believe there's going to be a lot of interest in. Now, for myself, who's been in equities markets, futures markets, and bond markets for so long, I've seen how old these systems are. I mean, settlements taking 3-4 days, transfers taking days or hours, but should be probably minutes. The way that they settle bonds, you wouldn't believe. It's literally manual. So securities tokenization, taking literally a whole industry, a whole ecosystem, I'm talking global, onto the blockchain, I think is absolutely amazing. Sending out a dividend, we send out dividends with our token, Astronaut, and every quarter we send out an email to everybody, or Telegram, whatever it is, and we say, guys, if you're holding your Astronaut tokens inside of my Ether wallet or whatever, doesn't matter how many you have, we don't even know, you're going to receive a dividend. You're just a number and another hash. And we will instantly send out 7,000 of them just like that, without, it'll literally take about a minute or so. That is unbelievable, particularly when thinking about what and how that can change the whole securities market. So this is something that we're extremely excited about. Polymath is obviously one of the leaders in this space that's getting a lot of eyes on them right now. And we think that it is absolutely ripe for disruption. The next would be alternate blockchains. And I really think that this is more so of I'm going to call it hype, only because none of them have really produced anything as yet. But we believe that there is going to be a lot of interest in different blockchains. And this is a geographic thing. China has Neo, South Korea has Icon, the banks have Ripple. This is something where, as a investor, we're always looking for these different pockets where people are creating different blockchains for different verticals. And we believe that they're going to continue to do very well as they've got very high community support. The next thing is stable coins, number 4. And this is an absolute necessity for the market. We believe that with so much volatility that we're seeing, and we saw what happened in January, there was about a 40% up to a 40% dip in some altcoins. And really, a large part of that was the scare around US dollar tether, which, we saw a lot of people pull out of the market because of that. And that trades billions upon billions a day. So by stable coins, we mean that we need something to put all of this cryptocurrency in that's not going to move. It needs to stay at $1, and people have to be comfortable with it. They have to be transparent. Tether refuses to audit the fact that every tether is backed by $1. They don't want to do that, and that has scared the market. And so there are different solutions that, in particular, we're investing in, and we think are going to do extremely well. Digix, which is gold-backed, Maker, and Haven, which are collateralized by tokens as well. So this is a huge part of the market. It's actually a necessity if we want this market to continue to grow. One of these solutions has to really work. And so our eyes are on these, most certainly. The next, number 5, second last, is KYC and digital identity. A lot of these are most certainly in their infancy, but we see this as a very big market, particularly for things from government and also banking as well, anti-money laundering. There is a company called Consensus that's currently doing a passport through Estonia and digital verification for the government there. We think that this is a huge area for growth. Our concern is only how our government's going to be receptive to it, and how long is it going to take. But we believe that this will be the way of the future. It's probably just a little while away. Looks like I got 7. So the next one would be arbitrage and high frequency trading. For those who have looked into this before, there has been enormous opportunity here. It's not uncommon to see a Korean exchange traded a 30% premium to a US exchange. And so a lot of exchange arbitrage firms, and I know a few of them in Hong Kong, have done exceptionally well in simply just, buying and selling the spread from different exchanges. So we believe that this is a very highly profitable business now. It does take a lot of work. And the other side of that is high frequency trading, as well as creating bots, not only for market making, but obviously for directional trading as well. Somebody showed me a high frequency trading bot just the other day that you can plug straight into Binance with code, and it trades all for you. So we think this is going to be, it's essential, I think, the high frequency trading to a developing market. The New York Stock Exchange right now, 82% of the volume is via high frequency traders, bots, etc., and algorithms. So that being the case, if we're expecting maturity within the crypto market, it's going to be pretty much the same thing. Now, the last point, number 7, and I forgot I had another one in here. These are the other ones that they're not quite, how can I say it, in ICO. These are more services driven that we believe are going to have significant growth, or I should say monetization. The first being security. So a lot of you who are active in the market would use either a Trezor or Ledger Nano. Ledger has done about $100 million in sales last year, and I think they're selling at $90 each. So security and hardware is just such an enormous part of the whole ecosystem. And I think that anybody that comes out with even anything slightly better or even anything slightly worse than the existing solutions is going to do extremely well, because people are always looking for the latest gadgets when it comes to this whole cryptocurrency ecosystem. The next one would be custodianship. So, for example, I believe the Winklevoss twins launched Gemini, which is basically a custodian for institutional cryptocurrency, Ethereum, US dollars, Bitcoin, etc. And this is a huge part of the market. If we're expecting institutional interest to grow, if we want family offices in and private equity funds and the big money, then this is absolutely essential. And they've done a really good job at setting that up. So it's likely that Gemini and these custodians that are launching are going to do very, very well. We've then got legal and advisory. I think there's a lot of money to be made in the legal side of things. I recall when we were starting out our ICO, you've probably heard of Crypto Valley before, which is sort of a Swiss, they've almost made it a geographic location where everything is cryptocurrency related, and you can basically go from zero to launch in no time. And before we started the ICO, my lawyer in Singapore, he said, you should have a chat to these guys in Crypto Valley. The lawyers there, like they should know about all the structuring, and you can get some ideas off them. And I said, great, I'll have a talk to them. And we sent them an email, and they said, okay, before we talk or get on a phone call, you'll have to send us 2 Bitcoin. And my lawyer said that to me. He said, well, we only need to send them 2 Bitcoin. I said, do you know what the price of Bitcoin is? It's about $6,000. So they want $12,000. They don't even know what we want. We don't even know what they're going to ask us. It's literally just to pick up the phone. And so the whole services side of things has absolutely exploded. People are charging a lot more. Whilst it may not be ethical, it's certainly a very large part of the market now. In terms of legal and advisory, and people are charging for it exponentially. The last one we've got there is research, and that's a shameless plug for us, but research and institutional research most definitely is a very large portion of the market. Weiss just released their ratings reports. There are a number of other institutional research houses that are making a lot of money in simply uncovering good opportunities for big institutions. So we believe that in order to grow this market, transparency and research is always going to be needed. It's very important. There's a few questions there. I see some people have raised their hands.
Adam, you want to start off?
Sure. And Matt, this has been truly unbelievable, just stellar. You've answered almost all my questions anyway, as you kind of progressively made your way through. But really, I was just blown away at how you decided to come up with something new and completely create a new market, right? The ICO for ICOs. But all of us some of us, let's say, we're exploring, doing our own startups, and we're working on our own white papers and looking at ICOs later and things like that. And so I guess my question for you is more, being someone, if you put yourself in our shoes, right, starting over now in this kind of market, is there any tips or anything you could recommend, finding an incubator or something that we should avoid? You know what I mean? Like someone who we just know about medical, or we just know about our own niche, but we don't really know about the whole, getting established.
Sure, I understand. I would say, firstly, it's only a matter of time until the whole ICO market, for example, will basically become like I'm not going to say venture capital market, but it is becoming very institutional. So my point being is that I don't think that anymore you can just come up with a solution and launch it publicly and expect to raise a lot of money. Companies that do the best right now, number one, they don't do any marketing at all. There's no marketing involved. There really isn't. So there's Facebook ads and influencers, etc. They're all gone. Companies that do the best right now also are building their product for much longer. So they're trying to get some sort of an MVP or an alpha version. They want to be able to show the market something. It's not just white paper anymore. It's not just 15 pages of text. You have to actually convince the market and show them, hey, guys, we do have something. Because what are investors looking for? They don't want to, this isn't a private equity game. That's not how people are looking at it. They don't want to invest in something and be locked in for months and months and months. They want to know that you're going to have a release. So time frames have changed substantially. And so I would say that this market is not going anywhere. Okay. There is no need to rush things. I would say, if anything, take your time, because there is going to be a lot of interest in this, institutional and retail, for a very long time. And the more time that you take to flush out your idea and what you're doing, and perfect it, or at least get it market ready, the better you're going to do. So I would say honestly, there's no point in rushing things. And if I could turn back time, we would also do the same thing. We would have waited probably longer to be able to start our token sale as well.
Wow, that's really helpful. Thank you.
Sandeep, go ahead.
Yeah, thanks, Matt, for doing this for us. And I agree with, I second all the things Adam said about your ideas. And you guys can hear me, right?
Yes.
Yes.
Yeah. And I personally little bit envy you too. You are just 30 and you are there where you are. But coming back to my question, that as you earlier mentioned, that the first thing is that you have to have a solid business case, a solid requirement. You have to have a need for a coin or a token. That is understood. My question was, I mean, there are two questions. One is that when you, as a capital company, look at an ICO, do you also look at the set of technologies underneath used for an idea on top of what ideas are? And do you consider while you are evaluating or valuation phase of the company, that what framework they have used, and do you have a preference over there that which one has been maturing and should be used? And the second question was, how important for a startup to take a legal advice in the initial phase? Can it be postponed for a little later phase?
Okay, I'll answer your first question, which was more regarding the technical development side of things and how much we take that into account in particular. I'm not from a technical background, so we have somebody dedicated to doing that. What we generally look at, and I'll just tell you, is not so much do you have a completed product and is it ready to go, and are you using this technology because it's better than something else? That's not really it. It's more so the case of, for example, how committed are they to the project? How many GitHub commits have they done, and have they been working on that for a long time? Have they just come up with this idea in the last month? While we do technical due diligence, we don't go down to a level in which we will start scrutinizing what code they're using or what framework over another, simply because that gets really hard. And most ICOs and token sales, etc., are probably not quite at that stage anyway. Usually the point of doing a token sale is to get enough money to then get developers to then improve upon that code. And so it is very rare that you're going to have somebody with a full flush product with a code base that they're going to use for the commercial product, because that's the whole reason that they're raising, to redo that or improve upon it. So while we do look at technical due diligence, we certainly don't go into it too in depth. We want to know that they're committed to the project and have been for a while, and that there are people working on it. We don't like opening up an empty GitHub. It doesn't seem right. So that's sort of how we look at the technical side. And then your second question was more so around the legal side. Is that correct? I would say for legal, it really depends on what you're doing, the type of token, whether it is a utility or whether it's a security. And I would say that it's easy to tell, but the lines are getting quite blurred at the moment, particularly with what's happening in the US. So I would say before it's a really hard question. I would say get legal advice, simply because, understanding it may actually affect the way that you structure the token and the offer. You don't want to do all the work only to realize that at the end that it is a security token that you can't offer in the US or Singapore or whatever it might be. You're better off understanding that initially, so that if you need to restructure things, repurpose the use of the token, then you can do so then. And that way you're not wasting a lot of time. So I'd certainly suggest getting legal advice first.
Thank you.
Prakash, go ahead.
Can you hear me, Michael?
Yes.
Yeah. Matt, Thanks a lot for an excellent presentation and very useful information. So I have two questions. One, Astronaut Capital, about your company. Can you share a bit more details? Like if someone wants to invest in your company, how do they get in, and what are some options available? And the second question is, you mentioned about high frequency trading and currency exchanges on different platforms. Like for an individual investor in cryptocurrency, means I'm just getting started and I'm looking for some investment recommendations, like which currencies are potentially good currencies to invest and get exposure to.
Sure. Okay. So for your first question, with regards to Astronaut Capital, we're a token. At the moment, we're listed on a number of decentralized exchanges. Our token price is trading at approximately 2 times our assets under management. Interesting thing about doing a token like ours, you can actually put a valuation on it, as opposed to most other tokens out there. We're able to be purchased off a number of decentralized exchanges, including IDEX, Ether Delta, Fork Delta, soon to be Bancor as well. And effectively, our model is over a period of a quarter, we invest in a bunch of things, mainly ICOs. And at the end of that quarter, we send out 50% of the net profit straight out to token holders, whoever's holding the tokens. And then the other 50% is reinvested into the fund, therefore token value going up. It's a really, really easy model that we employed. So anybody can buy them as long as you're using a decentralized exchange. You simply just have to hold them in your wallet. Now, doing so also gives you access to our app, where you can see all of our holdings and funds under management fluctuate almost live, all of our research as well. So being transparent, I don't think many other fund managers do this, but when we actually invest in something, we back it up with 15 pages of DD, and we send that out to everybody so they can get an understanding of why we're actually getting into something. So, I hope that answers your first question. And then the second question you asked was, if you're starting out, particularly in the trading and investment sort of sphere, well, what to get into? That's a really tough one. I would say, I tell this to all new investors. I say, obviously, first thing, disclaimer, don't trade with more than you can afford to lose. That goes without saying. But pick just a number of different coins that you've researched. I don't like giving people too much investment advice, particularly if they're just starting out, because really to own something and own whether it goes up or own whether it goes down, and you need to be able to make the decisions yourself and understand why you actually got into it in the first place. That way you can't blame anybody, nor can you blame me. But I would say one of the really great, and there's only a few, so I'm going to narrow it down for you. I think a really good segment of existing coins and tokens that you should look at would be privacy. So look at privacy tokens, and I think that as a long-term hold, those are certainly a good sort of segment of the whole token market.
Thank you.
Go ahead, John.
Hey, Matt, thanks for doing this for us. So I have like a million questions. I'll try to be specific about a couple. So in the, you briefly touched on utility versus sort of a securities token. Can you unpack a little bit more kind of that space of utility and how you guys are calculating it? Is token velocity part of the mix? I guess some of the tokenomics is one of my curiosities.
Okay, so you mean how, like, distinguishing between a utility and security token? Is that your question?
Yeah, and particularly as one may need to switch from something that could be.
Yeah. Okay. Sure.
Yeah.
Look, this is a really hard one because I think it's getting quite blurred between the two at the moment, and people are trying to disguise one as the other. And I don't actually think it's going to matter very soon anyway, because a lot of the new securities platforms coming online and tokenizing securities, etc. But right now, the reason that people are doing private sales, 80, 90% private sales, is because they're too scared to do a public sale because of the fact that they may be a security. They don't even know, or they may be so far from it. But doing a SAFT agreement, which only goes to accredited investors, means that they sign away their life and say, well, I'm taking all the risk and I don't care whether it's a security or not. It's the whole point of a SAFT. So when you ask, well, what's the difference between utility and security? I think the biggest component of security is whether the purpose of the token is, number one, to go up, which everybody thinks that every token is meant to go up. So that's a tough one. Whether you're meant to make money off it, again, a very tough one. Dividends is a big one. So we're we're most certainly a security token. So sending out dividends or profit share remuneration, commissions, even buybacks. So there's another strategy that some tokens do. Instead of sending out dividends, what they do is if they make a profit, they just burn tokens. So it's almost like a share buyback or reverse dilution, therefore making the pool smaller and all of those tokens worth more. So there's a number of ways that you can tell that you are certainly a security token, but there's so many other ways that I suppose it could almost be one as well. So it's very difficult. It's a hard question to answer because I think that the definition is changing almost on a monthly basis. So I would say it's those major points that would put you in the definitely yes category for security token.
And Susan B. in Florida, go ahead.
Hey, Matt. Thanks so much for joining us today. Awesome presentation. Just had a quick question about the moats around your business specifically, or other ICOs. Like, how are people stopping other copycats from doing the same thing? Especially maybe with yours, how you have such transparency in what you're holding in the fund. Like, how are you stopping copycats?
That's a good question. We haven't had any for us. I don't think, I'll say it like this. I don't think anybody can do what we do. It's for copycats. It does happen. I think most certainly with a lot of white paper projects, it's very common to see the same website template used 100 times by different ICOs. There was even a point where white papers were almost being copied word for word. For us, because we're not really developing a lot, and we're not developing anything of significant value. We are a security and we are more of an investment token. And so it would really come up to somebody launching and having better performance than us and being able to produce better research, which is hard. And it's a lot of effort. It really is. But for other platforms, I think it certainly happens a lot. People call them out on it. And if you do, if there is a copycat, and you'll note that they usually do get shamed a lot. I think one of the really interesting things about this whole crypto community ecosystem, if somebody does something wrong, you can bet that you're going to go on Reddit and find, 200,000 people talking about it. So word gets around extremely quickly. And I think it's very easy to get a bad name in this whole industry. And that's happened time and time again. So I think that copycats do happen, plagiarism happens, but they never really get anywhere, particularly if it's just blatant. That's my view of it, but we don't see it as much as what you would think.
So Matt, I've got an interesting one for you. This is it's a company in China. This came across my desk, and something doesn't sound right. And I wonder if you can demystify this for me. So this company is in China. It's an educational company. And basically there's a high demand for Chinese parents paying lots of money to have their children learn English from high quality English educators. One of the challenges in China is that some of the Americans that go over to China to teach English are pretty unqualified. Some of them have criminal records. They wouldn't pass a Corey check. Some of them have zero qualifications, but there's such a demand they get the jobs. So this company is trying to get high quality English teachers. And in America, there's a lot that don't want to move to China. So they want to make it online. They want it to be live, where it's either a one-on-one premium service, or at best, it's going to be at most 5 kids in one Zoom room with the English educator. Now, China has a challenge that you can't export more than $50,000 per year out of the country. So what the company wanted to do is they want to do tokens where the Chinese parents buy the token from the education company in China. Then the China company will send the tokens to the American educator in the US, and then they have to convert it back to US dollars. And what I can't figure out is they don't want to just do Bitcoin or Ether or one of the regular ones. They're very stuck on doing their own token, and they want to hold on to 30% of those tokens for themselves. They want to pay the English teachers all of the tuition. So all they want is the currency play. And I'm trying to figure out, is this a bad idea? Is this money laundering? Because I think if you told the Chinese government what they're trying to do, they'd say, no, you're just trying to skirt the $50,000 law. And I'm curious what you think of this idea. I can't quite, something's not sitting right with me, and I think you might know more than I do about this. What do you think?
Yeah, I think that, as I was saying before, red flags, and I think you've just named a bunch of them. You know, at first, the first thing you said was, well, in China they can't send out 50,000, so they're creating a token. I mean, that you know, I think you can answer your question there in that very first instance, in that they're basically creating what they're trying to call a utility token, so that they can circumnavigate the government. Now, remember, ICOs are actually still pretty much illegal there anyway in China. So even doing an ICO with tokens that are active in China is still illegal. Then the question is, well, if they're doing a token, and let's say they're raising 10,000 Ethereum or something, and they're raising $5 or $10 million, what are they actually doing with that money that they're raising? Where is it going? And how is it going to benefit the token holders? What do I do with the token is the other question. Is it simply just a token that can only be redeemed to Bitcoin when it comes from China, or vice versa? Or is it just being converted into fiat? For me, that doesn't really make a lot of sense, particularly because the token isn't actually a utility of the business, which is teaching online and stuff like that. The token, in this instance, is simply just there to circumnavigate the government, and basically it's money laundering. So I would say it's probably a no. I wouldn't go near it, but you know, I haven't looked at it yet. So initial thoughts, yeah.
Yeah, okay, so my indigestion was actually just intuition, basically.
Exactly.
Okay, fine. Thank you. Thank you for that. And John Stock, I see your hand is up.
Yeah, good luck with that, Michael. That seems it's going to be an interesting one for sure. So back to you, earlier in your presentation, you had talked about some of the factors that you were kind of using to determine, the viability of an ICO. Some of them were like team, the actual tech, et cetera. Last night at the conference I was at, some of the folks from the DNA Fund were there, and they talked about this. They used the word lighthouse was one of the factors that they use. And what they meant by lighthouse was some particular thing that would make you stand out or make you competitive, where if an incumbent in the space tried to just come in, they would have a hard time just going, we're going to switch to Bitcoin and just take you out of the mix. So they used like one of their examples of lighthouse was, do you have like 100 million users already, or is Michael Jordan backing you, or these sorts of factors. When you guys do your analysis, does that come into play, or how do you start thinking around Bitcoin or blockchain stuff versus incumbent companies, and how to actually control some of the market or be competitive in that space?
I haven't heard of Lighthouse before. That's an interesting one. So what we look at is, there's a few things. What I would actually, I'll see if I can just pull up a report here, if you can actually view it. Let me just see if you can see can you see the screen now? Can you see a new report?
Yep. Yes.
Yeah, you can. Okay. So this is a example of one of our reports. This is for Piccolo Research. of a company that we analyzed a little while ago. And I'll just run through this super quickly, page by page, just take a minute or two, but you can get an understanding of what we look at when we break down and pull apart basically a potential ICO. So the first one is, as you can see, the token sale metrics. So a really big thing is, well, what's the structure of the token sale? Are the team keeping a lot of it? How much is actually being sold into the market, and how many are on issue? So one of the big misconceptions in this market that I think people just don't get is the fact that the crypto market is actually much smaller than what everybody thinks. Just because on CoinMarketCap it says that it's 500 billion, it doesn't actually mean it's 500 billion. Now, today, it'll take me about 20 minutes. I can launch a new token called MatCoin. If it doesn't exist already, I'm sure it does. And I can issue 1 million of them. Okay. Now I can sell one for $1, and then I can airdrop the other 999,000 of them. Okay. I've just made effectively a $1 million business by doing that, even though I've only sold one token. Now that $1 million will then contribute to that $500 billion of market capitalization. So what people need to think about, and I'm trying not to get off track, but tokenization and token metrics as to what is actually offered within a token sale and what is going to be used is very, very important, particularly in valuation. So what we look at is how many tokens are being issued, how many are the team keeping, how many are they actually putting out to the crowd. The team in foundation, they call it keeping 80% and the crowd's only getting 20%. We look at those sorts of things in terms of the token metrics. We then look at the actual commercial strategy of what they're doing, roadmaps. Roadmap is a really big thing. You know, in any other business, as you know, whether you're in venture capital or private equity, if I'm giving you $1 million, I want to know what your plans are for the next 12 months or 24 months. But, you know, 80% of the time, the companies don't even mention it, nor do they give you time frames. So you need to press them for these sorts of things, understand what is the roadmap, put something down in writing so that if you don't do it, then you're going to get in trouble. So ownership and accountability is a big thing. And so a company actually saying, yeah, we're going to commercialize, we're actually going to release our full app or whatever it might be, our mainnet in December 2018, great. They've put that on paper and the market can hold them against it. So that's a really big one in terms of roadmap and commercial strategy. The next is, you can see down the bottom, is use of proceeds. Once again, this is something that should be standard within all industries, but if we're contributing as a community $10 million to your ICO, how are you actually going to spend the money? Is it, you know, are you going to party with it and buy a yacht? Are you going to spend it on development? Are you going to do Facebook ads to bring in, you know, more users? What is it? So an actual budget, no matter how simple it is a real big one. And we look at that all the time, whether they're just going to waste the money or not. I would love to see how, you know, Telegram is going to spend their $850 million. They haven't put that out yet. And too many of these ICOs, unfortunately, don't. We then look at the team, any advisors. We don't really pay attention to advisors too much. Advisors are more of a name to hire, to be honest, in most instances. I don't think very often advisors do a lot, I regret to say. But where we really get into things is actually pulling open these companies and being as critical as you possibly can to say, well, what are the great things about it? Do they have competitors, and why are they better than their competitors? You know, in this instance, this is one called Fund Request. Is this Fund Request? No, this is Current. So this is effectively an app. Sorry, this is an app with a existing 200,000 people. Actually, this is a different one. Sorry. 200,000, I should say, an existing app with 200,000 users on it. They're looking to put out tokens to. Now, we know that there's going to be a significant amount of people using it instantly because they've got already that database. So there are other competitors that they have, but that's exactly why they're most likely going to make it the first spot, because they have they've got an advantage of already having an existing business and an established base and a token that will likely work. So being very critical about the strengths, weaknesses, and opportunities and threats, etc., is all really important. And that for us is pulling open a company is sort of the main things that we'll be looking at in order to come to a decision as to whether this is a viable investment or not. I would say one of the other big things, though, in this current market, and it wasn't 6 months ago, is things like lockup periods, investing. So most ICOs right now, if you're getting in private sale, then there's a good chance that they're going to try to lock you up. So you can see that this market's maturing a lot. There is no pump and dump like there used to be. Most of your tokens will be held and vested over a period of time. So that sort of structure of, well, what is it that I'm getting and how long am I going to be locked up for, et cetera, that's also a big part of it. So they're sort of the main things that we would look at when doing our analysis. And this is a short report. We've actually got much larger ones, but yeah, that's just a quick example.
So Matt, you said something that was very interesting and a bit of a surprise. I'd like to dig in a little bit deeper on it, where you said that some of the people that are actually appropriate to get funding, they don't really have anything completely working yet. They have this really great idea. It makes a lot of sense. There's been a lot of tire kicking. And the reason they need to raise the funds is to hire the people to make this thing really come to fruition. And I think a lot of people sort of self-intimidate by saying they have to have the thing up and running before they come to you. And so with that, I have a question about a student I met with yesterday. He's from Pakistan. And I was talking to him about using blockchain for supply chain is a very appropriate use and pretty simple. And I was showing him how the example of how Maersk has partnered with IBM to put all the global shipping on the blockchain so that everybody knows where everything is at the correct time. And right now, people will spend twice as much money tracking a shipping container as they do paying for the shipment of it. So just a lot of wasted paperwork. Everything is in silos. And so I said, you could just go to importers and exporters in the United States. And let's say, just to keep it simple, since he's from Pakistan, how about you make it really simple to track everything from Pakistan to the United States from the minute it leaves the rug shop in Pakistan all the way till it gets to Los Angeles or Boston or the New York port to the rug shop there and all the steps in between. And I said, you're a startup, you're probably too small to go to some huge place like, let's say, Restoration Hardware, but you could probably do something small like the mom and pop food shops, mom and pop carpet shops. And I threw up the idea of him creating a blockchain for supply chain where he would rent out his blockchain only for the period of time that shop owner needed to track a shipment. And the question is that a decent idea? And two, would that be something that's far enough along to actually bring to an ICO to raise money, or does he need to do more before he's at that point?
Firstly, supply chain management is a really good solution for the blockchain. I mean, in terms of the whole ecosystem, when you look at things like supply chain management, logistics, tracking, all of that, it actually has been done in many instances for different use cases. So that's one thing, is that people have actually realized that, blockchain's an appropriate solution for it. And so companies have been built around everything from fresh food and seafood tracking, logistics, and then counterfeit, stuff like that. They're quite big ones. So the competitive zone for it is quite large. Is it easy to do? Is that an opportunity for doing an ICO? Possibly. I mean, it comes down to a business case. I think that in a lot of instances, people can come out with an MVP and working product without doing an ICO or needing to do anything. The real question is, firstly, why does there need to be a token? And I'm sure there is a reason for having the token, but what is it? And then secondly, doing an ICO is a method of raising funding. So where would the funding go? Is it to build it out further and polish it, or is it to market it? Is it to create partnerships to use it as an enterprise technology? So there could be many different things. I would say for most people, I think that ICOs certainly are getting harder. I don't think it really matters how great your idea is. It requires so much commitment. And I have seen fantastic products that are completely under the radar that don't get funded anywhere near as much as what you'd think. And then on the other hand, I've seen terrible products. I mean, Banana Coin a few weeks ago, which is a token that's backed by a kilo of bananas, that raised like $4.5 million. But, you know, a new identification verification management system wasn't able to raise two. So I think that the success of doing an ICO, it's very hard to pin down. There's things that you can put in your favor. Whether you should actually do the ICO in the first place is more of a question of whether you require funding and you actually want to commercialize it. There's actually a lot of businesses now that are just launching their tokens and airdropping them and not raising any money or Ethereum or Bitcoin. And that can be a great idea, because if you can actually have the market require a token that you haven't had to raise money for and just buy it, then that's a great thing. You know, there's most certainly demand there. You know, I think a lot of people are moving away in some instances from doing ICOs because of how hard it is also getting. So I think the idea, to go back to it, I think the idea is really good. I think the question of whether there needs to be an ICO would have to be looked into, particularly given how many competitors are out there trying to do the same thing that have previously raised a lot of money. Because as soon as somebody says, I'm in supply chain management, the first thing anyone will do is say, well, okay, what about XYZ company that ICO'd last year? They're already ahead of them, or this or that. I think that would be the main concern.
You bring up some interesting points. So they might not even need it, but I could see a valid use for a utility token. Again, let's say that I'm the shopkeeper in Cambridge, Massachusetts, and I want to import some rugs from Pakistan. I don't know about this stuff at all. All I know is that it's a real pain to import something from Pakistan, you know, between the bribes and it takes forever and stuff gets lost. I could totally see, okay, I could see my stuff moving along. I know exactly where it is at the time. So the whole trust and verification thing is taken care of. I could see buying a token to say, I'm going to buy this token, which is the price that I'm paying to have this transaction tracked and managed. So I could see, which is basically like me giving you the $100 or whatever it's going to cost to have this thing move. We're just kind of exchanging US dollars for token if you want to play that game. But you make a good point about it might not need equity raising. I'm curious if this kid has a cool idea, how much money would it cost to find a developer who could make this supply chain blockchain software where he could just kind of, you know, plug it in?
I'll ballpark it. I mean, Solidity developers off Ethereum are getting really expensive. Okay. So, you know, a lot of them are commanding maybe even up to $250, $300 an hour or so. But in saying that, it's actually not that hard to learn for any other experienced developers as well. So even if you were to get somebody that's already a developer to learn it, might take a little bit longer. I would say that, I mean, applications, it's quite funny in talking about this because people raise enormous amounts of money of $15, $20 million, but realistically it might only cost them $50,000 or $100,000 to do their product or the first version of it. So I would say, and I've run development teams before in the past as well, there's always cheaper ways to do things. You may have to compromise on some things, but I think for something like that, particularly using existing infrastructure and code, you know, and I'm ballparking it, but maybe it could be done between, you know, $25,000 and $100,000. I really don't know, but I know that there are solutions out there that wouldn't quite be plug and play, but would obviously speed things up quite a bit. So, you know, once again, I think ICOs are getting very expensive to do. And so if you can avoid it and you've got a great idea that you think you can penetrate the market with, without an ICO, then I would say that that's probably the first port of call.
Sure. And I appreciate all the time that you've spent with us. And I'd like to give you some free commercial time. So I used to be a money manager like yourself. I retired about 15 years ago. And I'm curious, in your form of being an asset manager in Singapore, what is the regulation, if any, for having the company that you have? Are you regulated?
So we're actually Cayman Islands based. In fact, when we raised money for our ICO, we couldn't take a dollar out of Singapore, nor could we from the US or China. So we probably cut out about 80% of our database, unfortunately. And we're only able to raise that funds from countries outside of there. Now, the actual fund is domiciled Cayman Islands with an investment management in Dubai. Our research arm is based in Singapore. So they're basically separate entities. And so we've got the research and then the asset manager, two different things.
So why Cayman Islands and not somewhere else?
92% of the funds around the world are registered in the Cayman Islands. It's most certainly the best jurisdiction for funds management.
But why? Okay, well, I'm trying to figure out why can't you raise money from U.S., China, or Singapore? I think that's where I got a little.
Okay, sure. So when we did our ICO, this thing called the Howey test, which you've probably heard about, was just coming to light, and SAFT agreements, which was the simple agreement for future tokens, was just coming into existence as well. So we were on this really odd verge of where are we in the whole regulatory environment, because there were companies extremely similar to ours that were ICOing months before us with no issues. And so right at the very last minute, we had to effectively say no to most of our database, simply because, in efforts of self-regulation, we didn't want to risk any issues with the SEC. It wasn't just us. I think many ICOs around that same time did exactly the same thing, because there was no other way to take any Ethereum or anything from the US. So that was a period in time where, unfortunately, if you had a US passport, you were not contributing to very many ICOs.
But what if you're an accredited investor?
See, back then, there wasn't being an accredited investor, and the SAFT didn't really exist. That only came out a few months later. So this whole simple agreement for future tokens only came into effect really in September, October, in which we did ours just prior to that, our ICOs. So that was when the SAFT came out, it basically became the standard for accredited investors.
So can you take U.S. investors now?
Now we can, yes.
Now you can. And how do you get paid?
So we take a performance fee and a management fee. So the management fee is 2%, which is quite standard. Our performance fee is half of that of basically anyone else, which is 10%. So standard in the industry is what they say, they call it 2 and 20. We're basically 2 and 10. Yeah. That's it.
Yeah. So for the class, on a 2 and 20, I almost had a hedge fund before I retired, but on a 2 and 20, if you have a 20% annualized return, your management fee is going to be about 6%. Just to give you a little sense, that's kind of how I always looked at it. But 2 and 10, that's pretty good. And here comes the fun question. What's a great question I forgot to ask, and you just really want to get it on the tape so everyone hears it? What would you like us to hear?
A great question. A great question. I don't have anything. You could have warned me beforehand.
I just like to throw it on people. So yeah, if there's anything that you want us to know that we didn't cover, what would that be, if anything?
Put me on the spot. It's too late here to get
that's
my
right.
brain.
It's like 3 o'clock in the morning.
It's like 3 a.m. here.
Oh, I'm sorry.
I'm trying to wake up. Air conditioning's off. The lights will be going off soon. Sorry, I don't have anything, but thank you.
Okay, no worries. Well, Matt, thank you so much. You've been very generous with your time. Your insights have been great. I think you lift the veil of confusion for a lot of students. And we've recorded this, so we're going to put this on a private YouTube link. We're going to send it to you. And feel free to share it with anyone that you like. And again, thank you very much for your time. If you ever come to Boston, the lobster's on me.
Thank you very much, guys. I really appreciate it. It's been fun.
Thanks, Matt. Take care.
All right. See you.
Bye-bye.